This is our Forex blog for March 5th, 2012. I had data issues last night, so I just restarted the software. The historical statistical trend strength is on the top. It's very accurate even when you first bring it up, even on past bars. But underneath that, the daily, weekly, monthly trend uses the latest trend and colors all the past ones. At the time, it might have been in a weekly and a monthly downtrend. There's no way to know because of the data issues I had. Anyway, you don't need the daily, weekly, and monthly trend underneath it. All you really need to do to find the strongest trending currencies is use the real-time one on the top. This is made up of 5 different statistical trend tools. 3 of them measure direction and 2 of them measure the intensity of the direction. And anytime you see levels significantly at and above the 80 level here, followed by pullbacks, downward moves with less momentum, especially like this, that trend is very likely to continue. In fact, the first sign that it may not continue is when you had such a strong amount of weakness here for a little over an hour. You can see the strength did come back, but only lasted an hour, unlike about 2.5, 3 hour move here, hour and a half move, and so forth. You basically just want to buy the strongest currencies versus the weakest. The weakest one consistently throughout the night was the New Zealand, the CAD. So these are 2 good ones to sell versus the dollar and the yen. The New Zealand yen, you want to sell it. If you bring this currency up, you can see, first of all, starting on Sunday, it was underneath the hourly moving average. This is one of our filters. And in fact, even on Friday, it went underneath the hourly and then did a retest right here. This proves that there's some sellers at the hourly. The New Zealand yen was typically strong, but it was likely to do for a little bit of a pullback. And you can see that's exactly what happened here. Just straight down. And in fact, this signal right here shows the market's down too much. Most of the time the market retraces all the way back up to the hourly. But earlier today you wanted to get short here when it broke Friday's low. Little pullback right here. You probably would have got stopped out with a 5-pip loss. Short again, somewhere around 67.25. You can see our trailing stop got you out at 96. So if you lose 6, 7, 8, 9, 10 pips and then make 20 or 25 pips, guess what? That one win gets back your loss, and sometimes 2 or 3 losses. So you don't need to worry too much about if you take a trade and it's a losing trade. Once it's underneath the lower containment band, however, what you really should do is draw your fibs on the last move down, and somewhere between the first and second fib target, look for counter trend buys. I would kind of wait to see some of the statistical weakness kind of level off a little bit, like maybe right here. If the market had gone sideways right here and broke out, I'd be going long. And typically markets, once they're underneath the lower bands, don't make more than 2 waves down. So here it's right at the lower bands. This is the first wave down, and this is the second wave down. And you can see that this fib target right here, very aggressive place to look for a counter trend trade, and it went up 50 pips from there. So you certainly can trade with the trend, but you also need to know when the market moves statistically too far and count the waves. This is the first wave down, second wave down, and the last one was not so significant. A lot of times the third wave is the biggest wave, but in this case it isn't. And when it's, usually my rule of thumb is when it's under 25 pips underneath the 2.0 containment band, which this is up here, that would be 10, 20, 25 pips. At that point, it's relatively safer to go against the trend than with the trend. One day out of every maybe 6 to 10 days, you could have another wave down, and sometimes 30 to 50 pips. So don't get too aggressive down here. Don't buy 2 times or 3 times more than you normally do. And also keep a very tight stop. Watch it like a hawk. If you don't see the bars turn green, if you don't see statistical momentum coming in here, get the hell out. But notice how our intelligent trailing stop got you all the way out here at 12. You might have bought this right here when it finally broke out and turned green at 79. You made 30 pips while risking 10 pips. And that's really the only secret to trading. Most of the time in our Forex blogs, I do trend only, but I get bored. So I like to tell you how I trade counter trend as well. A lot of times in the US session, if the market's already down too much, you really don't have any choice but to trade counter trend if you want to catch 20, 30 pips in an hour, hour and a half. 2 hours. All right, so we saw the New Zealand yen fell. The New Zealand dollar is also going to fall, and you can see exact same thing happen here. Now this one gave you a trend reversal triangle, which usually are the end of the moves. So I would be more aggressive after selling this last move down here, looking for a counter trend buy. I might have went long right here and had a break even, went long again right here when the trailing stop got hit at 20, out here at 38, nice 18 pip move. Whenever you see reversal triangles, it's usually the end of the move. Within 5 hours, you're going to likely get 20 to 50 pips. In this case, it went back up. I might have bought this pullback here and lost, and I'd be watching it right now as it goes sideways. If it breaks above the high here at 22, I'd be buying it with my profit target up here at 54. So as you can see, the CAD is also weak, so you want to sell the CAD yen as well. And notice that this one's just straight down. And again, when the market gets underneath the lower band, typically it doesn't go that much farther. You can always draw your fibs, and usually somewhere between the first and second fib target, you're going to find a reversal. So I might have bought right here and had a small loss. Usually after I have a small loss, I'm a little bit more careful. I wait for the little 1, 2, 3 pattern right here, buy again right here at 64, and out here at 03. You can see if you lose 10 pips and then you make 40 pips, you're netted 30 pips. So let's also take a look at buying the dollar CAD. Strong dollar, weak CAD. This is very likely to go up, and as you can see, it does. Here's my Fibonacci profit targets predicted from the night before, and this one also broke above the previous day's high right here, so you might have got into a trade with a small win. Got in right here with about a 5 pip loss. Maybe you bought this last pullback right here at 03 and out at 11, small 7 or 8 pip profit. And then when you buy the last trade, again, most of the time it doesn't go beyond the fib target, so you can see it went right up to the 1.618. If you got back in this again in 18, you probably got out somewhere in this sideways range and you made 20 pips. I wouldn't have bought this last one because it's above the upper containment band, but if you do, be very careful because it's very likely to reverse and come down a significant amount of pips, which you can see it did.